time to talk Tesla. The stock's pulled back pretty significantly from those December all-time highs. Let's bring in Caroline Wood, senior markets correspondent, here to help us break this one down. A couple of notes out there today floating around on Tesla, Caroline, but it just continues to be that choppy trade, and I probably expect that to continue, right?
Well, we're certainly seeing that choppiness today. Tesla on pace for its fourth straight day of declines, but really bouncing back and forth across the unchanged line right now. That being said, certainly a laggard of the Mag 7 so far in 2025. Tesla shares down about 10% year to date, and the worst performer of the not so magnificent 7, if you will. Some of the analyst action today also likely not helping Tesla shares, even though one of the calls from an analyst still very much a bull, but trimming their price target. That's Stifel deciding to cut their price target down to 474 from 492, kept a buy rating. So Tesla's currently trading around 360 right now, so still about 30% plus upside from current levels, but scaling back expectations nonetheless, based on what they called mixed Q4 results, stiff Chinese competition, pricing headwinds, uncertainty around the Trump administration. Also, low favorability ratings for the brand, which it says could hurt near-term sales. Says that's likely linked to Elon Musk's political involvement, but their latest survey shows Tesla's net favorability rating slid close to all-time lows recently. So sticking with the buy rating based on several bullish factors as well, including record low Q4 cost of goods sold per unit, a lower priced vehicle coming out in 2025, Optimus production ramping up in 2025 as well, a robust outlook for energy storage, and then unsupervised full self-driving expected to make its public debut in June. So we know there's a lot of bullishness around FSD. Meanwhile, Needham is less optimistic, sticking with the hold rating, but said after it went through and reviewed Tesla's model, it says growth levers like FSD, robo-taxi, robotics actually look more priced in than not. And the analyst still sees Tesla as an expensive stock and says it's operating from a trailing position in autonomous rideshare. So no price target given from Needham, but definitely some cautious commentary to go along with that hold rating. So Tesla shares down about 0.2% right now, but as you said, about 26% away from the highs hit just at the end of last year, and already down about 11% so far in 2025. Still up 90% over the past 1 year, so still has had this impressive run higher, but well off those highs.
Yeah, Caroline, and $10 off the lows today. This stock got hit hard on the open, down to the 350 level. So it's bounced back to 360, but the downgrades, the news flow doesn't favor Tesla right now. The politics doesn't favor Elon Musk's popularity right now. And until they can change some of the narrative from cars to other things like full self-driving and other things, this stock could remain under pressure, although, like I said, today a pretty nice bounce. But Stifel, that wasn't much of a downgrade. They kept the buy rating but lowered the price target by about $18, still $474, still significantly higher than it is right now. But like I said, the news flow and some of the high-profile news stories and the obvious hit pieces that have come out about Elon Musk all have seemed to warn on this stock and caused, like Tom mentioned, in bear market territory now.
Yeah, and I think the bulls very much cling on to that FSD autonomous AI story. I was talking to Garrett Nelson over at CFRA last week. He has the second highest price target on Tesla behind Dan Ives over at Wedbush. So his price target is 540. And he remains bullish all about the regulatory approvals and framework related to FSD, which Elon Musk's connection to President Trump, according to him, is actually a positive. So he says it's still trading at a fraction of the market opportunity, which he estimates to be north of $5 trillion in terms of global autonomous, the global autonomous driving opportunity. So he said he would be, a buyer of the dip that we've been seeing from Tesla. Now, he thinks the EV part is priced in to the Tesla story, unlike Needham, who thinks the FSD portion might be might be priced in. So it really, depends on how you look at it. Garrett Nelson says that investors, for the most part, have really been able to look past some of the noise in terms of the downbeat numbers that we saw in terms of not just Tesla's Q4 results, but also the numbers coming out of China. January deliveries fell 11%. The numbers out of Germany appeared weak. But he said Tesla has done a good job of keeping investors focused on the longer term and, the growth opportunity there. Maybe they're starting to focus on the nearer term, and that's why we're seeing some of this weakness. But as we've seen with Tesla, you certainly can't underestimate it. I will say the median price target is actually higher than it was last month. It's now $335. It was at $285 at this time last month, but that's still below where it's currently trading. That said, we know analysts have been mixed on this name for quite some time. The high is at $550 from Dan Ives, the low with Gordon Johnson over at just below $25. But there are some, $135 price targets there as well. So, it's a battle between the bulls and the bears, which is what we've kind of seen play out with the stock price too. So, losing out the past few days, losing out so far in 2025, but, we'll certainly see.
Yeah, and then you throw in the humanoid robots, Optimus. Elon Musk said on his conference call that could be a $10 trillion market for those, and I know they're ramping up, those also. All right, thanks to Caroline Wood, senior markets correspondent here, helping us break down Tesla. Alex, let's